Hey, what's up, Occidental fans? This is Rudy for Bester Investor coming at you live from West Palm Beach, Florida. Today it's Saturday, October the 10th, and I'm in a good mood because I anticipate a really great third quarter earnings report for Occidental Petroleum. It's early days yet, and obviously many things can happen, but Q3 is in the books. So what I thought to do is take a quick look and give you some reasons to be optimistic, Occidental fans. So Mr. Oxy saying hi, let's go. Here's 5 reasons why I'm optimistic about Occidental's third quarter results. Number one, the asset divestiture target that they set for themselves has been exceeded. WTI at $40 for the quarter. That's good news, right? The Buffett coupon paid in cash. The asset write-down that they had in Q2 as a huge loss on their balance sheet is not to be repeated. I don't know about that one for sure because obviously I don't know what's going to be in the Q3 earnings report, but I'm assuming you're not going to see a $6.5 billion write-down in Q3 again. The Colombian assets were recently sold and not for pennies to the dollar. So we're going to discuss that briefly too, and I'm going to give you some facts to back up my narrative. And I thought, you know what, here's 5 reasons why I'm optimistic, but I'll just throw in a couple of bonuses. Let's take a look back at the debt note tender offer recently, and we can also take a quick peek into investors buying warrants. Okay, well, on that one, I'm kind of maybe duplicating a little bit unnecessarily because specifically I'm going to talk about Carl Icahn, but let's take a look at these 5 reasons quickly. Number one, the asset divestiture target. So I asked Oxy Investor Relations during the week. I said, hey, give me some good news. And then just because I asked for some good news, the stock went up 8% on Thursday. Okay, I'm just kidding. I had nothing to do with that. But anyway, I did ask the question. And I said, what you got? And Oxy Investor Relations says, as we are close to reporting earnings, it's a difficult time to share any news or any new news. Well, I kind of knew that, but that doesn't mean I'm not supposed to ask, right? I mean, otherwise, how would I be able to share good news with you guys? So the gentleman who wrote said, I would just point to the fact that we have exceeded our $2 billion divestiture target for 2020, and we will use the proceeds from the land grant and Colombia transactions to reduce debt in the fourth quarter. So this is a quick look back at Q3 during the earnings report. What they told us was that their expected liquidity to address near-term maturities included a target of $2 billion plus in asset sales. They exceeded that not only just, but very comfortably. So that's reason number one. How about reason number two? West Texas Intermediate has been at around $40 for the quarter. So this is the actual spot price for West Texas Intermediate as of the end of September. And obviously we are now in October, so we don't know what will happen in October, but it seems to be holding at around $40. In my original mother tongue, we used to say, dit is Oktober maand, die mooiste maand, which is loosely translated as it is October, and it's a beautiful month. So let's see what happens with Occidental. Anyway, here's the spot price for WTI for the last quarter, around $40. In fact, it averaged just over $40. And of course, Oxy during the second quarter said that for the third quarter, their target was production of 1.225 million barrels of oil equivalents per day. So you can do the math on that one yourself if you'd like, but $40 times 1.2 million barrels of oil equivalent per day is a large sum of money. We already know that every $1 in WTI generates approximately $200 million in free cash flow for Oxy on an annualized basis. So that's reason number two. Reason number three, it was a little bit of good news from a few weeks ago. We, as in we, us guys, because we're the shareholders of Occidental, are going to pay Berkshire Hathaway's coupon in cash. So obviously this is news from last month. This was on September the 21st. So just a few weeks ago, after making the payments with stock since April to conserve cash as it coped with crude's price collapse and massive borrowing to buy Anadarko, this payment in cash likely indicates that the company is feeling better about its balance sheet and liquidity situation and may have more confidence in its ongoing asset sales processes, says KeyBank Capital's Leo Mariani. And Morningstar's David Meats adds, Occidental has the ability to generate substantial free cash at the current oil prices to service near-term debt. So that is reason number 3. Of course, in addition to the fact that the cash payment pretty much makes you feel good for the reasons I just shared, it also means that they're not issuing more common stock, which reduces the dilution to the existing shareholders. So we should all be happy about that also. Reason number 4, in the second quarter, we saw a huge pre-tax impairment charge on continuing operations of approximately $4.3 billion for unproved domestic onshore acreage, $1.2 billion for proved domestic onshore and Gulf of Mexico oil and gas properties, and another billion for international assets. This thing, impairment charges, is sort of like depreciation. It's not a cash entry on your balance sheet, but it certainly reduces your profitability significantly, and obviously this very much impacted Occidental's earnings per share for the quarter, which moved the total, I think it was from $1.76 to about $9 something on a GAAP adjusted basis. On an after-tax basis, oil and gas impairments on continuing operations for the second quarter were $5.2 billion. We are unlikely to see such an asset write-down for Q3, but I don't know what's going to be in the balance sheet. So for now, I'll just make a question mark here because I am not absolutely sure. It's probably the worst question mark you've ever seen. So let me just erase all this other stuff, and then I'll just leave the question mark there to prove my point. That was reason number 4. Reason number 5 concerns the Colombian asset sales. So you must beware of people who call themselves experts. I am certainly not an expert. I am not even a registered analyst or a lobbyist or anything like that. I'm just a guy who invested in Occidental because it's undervalued, and I'm trying to find information that I can share with you, which is not only useful but factual. So now, there are people. Now, these are the experts. So maybe you have to be careful when they are experts because, you know, experts. Michael Boyd wrote in Seeking Alpha. I don't actually, I'm not a subscriber, so I wasn't able to read the entire article, but it doesn't matter because what Michael wrote is pretty much here in the summary, right at the top of the page. It says, Occidental Petroleum announced the sale of its Colombian assets at a direct, cheap multiple to Carlyle Group. And Michael's, he was implying, or is implying, that Oxy sold these assets at pennies to the dollar, which prompted one of my subscribers, and forgive me for not being able to read this or being able to say your name. I'm so sorry, but I cannot read Korean, and Google Translate doesn't really do well on names. But the question was, how do you think about this article? Oxy sold valuable assets at a poor price. It would be a disaster and shows how desperate Oxy is for cash. This was just like a day ago, you know, so it's, I mean, the article is written on October the 2nd. I can see the date over there, and today's October the 10th. So it's just a few days ago. So who are these experts and what do they know that we don't know? Well, who better to ask than Occidental itself? So what did I do? I contacted Occidental Investor Relations and said, hey guys, they are experts out there who are suggesting that you sold your Colombian assets for pennies to the dollar. And you know what? I'm also an owner of Occidental Petroleum, so I feel I have a right to know whether this is true or not. I'm quoting here because this is my reply from Occidental Petroleum, not from Michael, who writes little articles for Seeking Alpha for 1 penny per click, but from Occidental Petroleum. And I'm going to read this. We noticed that a few of the sell-side analysts valued the Colombia transaction using an estimated EBITDA multiple. Now, for those of you who've been following me, you will already know that I attach very little value to EBITDA to begin with. He continues, while EBITDA multiples are widely used metrics for M&A, which is one of the reasons why most M&A transactions are either failures or otherwise almost failures. And a quick plug for the sell side, this may not be appropriate as a metric to use for international oil and gas transactions. Why? EBITDA multiples completely ignore international taxes, which can be significant, and OXY guides to a 45% tax rate for international assets. You can look that up, it's on their balance sheet, so to overlook that is just a gross, well, you know what, if you were an analyst, you'd be a bad analyst if you overlooked that, but anyway, some people are just lazy. After tax, free cash flow for the Colombian assets sold was $110 million in 2019, but Brent prices were significantly higher, considering onshore development and exploration capex of $190 million. We have always, we being OXY, this is them speaking, I'm quoting, have always stressed the importance of free cash flow for servicing our debt, and the multiple that we obtained was attractive. Who do you want to believe? The guy who writes for a penny a click on Seeking Alpha, or Occidental Petroleum's Investor Relations? I report, you decide. That was reason number 5. Okay, bonus number 1, or otherwise reason number 6, depending on which way you lean. The debt note tender offer. So what did I do? I asked Occidental Petroleum to comment, and they said, following the $3 billion notes issue, we are accepting tenders of $2.23 billion, including $1.5 billion of 2021 maturities. The remaining $770 million of the proceeds from the note issuance may be used to retire puttable securities we discussed. We discussed is them and me. If those securities are not put to us, the remaining proceeds will be used to retire other callable, prepayable debt. In summary, all the proceeds from the $3 billion notes issuance will be used to retire debt. That is good news. Just as a matter of interest, sometimes people ask questions like, what's the difference between a call and a put? And I always try and explain it like this. I always say, if you want to think of, or if you want an easy way to remember which is which, you can always say, I call my broker to purchase something. So a call means a buy, and I put something up for sale, which means a put is a sell. So if you can't remember or don't know what calls and puts are, always remember calls are buys and puts are sales or sell orders. Bonus number 7, or otherwise reason number 7, so it's bonus number 2. Well, for this one, the source is the SEC filing. I guess so far, if you've been following me through this video up to this stage, you will notice that my sources of information are probably people you can regard as fairly decent sources, right? Occidental Investor Relations, in this case, the SEC filing. Well, this is Carl Icahn reporting an open market purchase. But what exactly did Carl Icahn report? Well, on September the 11th, it's about a month ago because today is October the 10th, Carl Icahn purchased 450,000 warrants of Occidental Petroleum at an average price of $2.60 per warrant. 2 days prior to that, on the 9th, Carl Icahn purchased 652,000 warrants at an average price of $2.43 per warrant. And actually, in between on September the 10th, Carl Icahn reported open market purchase of 569,000 warrants at an average price of $2.33 per warrant. What does that mean? So remember, these warrants, and if you're watching this, you probably own some warrants too, give you the right to purchase. It's not an obligation. It's the right to purchase common stock of Occidental at $22 per share sometime during the next 7 years, which is the term of the warrants. Which means Carl Icahn is purchasing these warrants for $2 and a few pennies in order to give himself the right to purchase Occidental common at $22 per share sometime in the future. So think about that carefully, guys. If you are purchasing with your money the right to buy in the future Occidental Petroleum stock at $22 per share, surely you must be anticipating that Oxy will be trading well above $22 per share in order for you to be able to buy them at a discount. So that's my second bonus, or otherwise your seventh reason, depending on how you are keeping count. So there you go, guys. These are just a few reasons why I think Occidental will have a great third quarter. Let me know in the comments what you think, but more importantly, in order for me to keep this going, I want to build a community of really keen Occidental investors and people who care about where Oxy is going and what we're going to do in the future. And hopefully, if we can help one another, we're all going to make a whole lot of money on Occidental Petroleum. So on that happy, positive note, enjoy the rest of your weekend. This is Rudy for Best Investor, signing off, saying keep well, stay safe. Oh, and don't forget to click the subscribe button. Thanks for watching. Take care. Bye-bye.